In today's special weekend edition of our show, we have a look at the stock markets, crypto markets, and commodities right now. And we've got some great zones that we've all been looking together at over the last couple of weeks that are finally coming to fruition. The crypto market looks to be basing. The stock market is up, down, and all around, but has some great zones. And of course, commodities are on a run with gold possibly looking to break. There's a lot going on for this week ahead and plenty of opportunity, guys. So get ready, get a coffee or tea, and let's get started. Stay tuned. All right, everyone. Well, that's right. It's this time again in the year where we talk about earnings, and the stock market is just about to kick off the next quarter of earnings with some big bank results like Goldman Sachs, Bank of America, and some big airlines. And our big first tech result here with Netflix after the close on Thursday. Now, for anyone that's been watching the channel for a while, you would know that if you're thinking about the market on a 1 to 10 scale coming into earnings, most of the time, we always see the market usually packing in around a 7 to an 8 in terms of their expectation. Let's say that the market expects this. This is what analysts expect. Price will often come in a little bit higher. And that's why you generally need to see a big beat versus misses result. In general, you want at least higher than 60% and about 70% plus in terms of beats for the market to continue on with its trend. And that's something that we'll be looking at now over the next couple of weeks. And please remember to subscribe if you're interested in more content that's going to be covering the news, technical analysis, and of course, key levels that you should be looking at right now, along with the data. So we'll get into the week of performance. What actually happened in the stock market? It was all over the place. You'll notice some things here performed well. Tesla ended up with a 2.21%, but that really doesn't tell the story we'll be looking at later in today's video. We've got some things like Home Depot, JP Morgan ended up 5.55% down, and whole bunch of different sectors not necessarily doing that well. When we look at the indices and the close here on the Friday, it was a story of some growth, and the growth came out of really one particular sector. NASDAQ slightly recovered from its bottom, and you can even see during the trade day, it almost double bottomed here on the line chart. We had a bit of a resistance and it kind of closed around that peak. So a positive sign going into the Monday session, going into, of course, the earnings week and the earnings start. IWM and S&P 500 did get bought into the close, which again shows us that Wall Street was feeling a little bit more confident about buying this support. And if you think about it, the Dow Jones was down a little bit, 0.56, probably led by a small sell-off in the financial sector. When we have a look at the week, what actually occurred? Well, the overall week was bullish for one particular sector that you may not have actually been trading, and that was energy. A lot of people have underappreciated the energy trade over the 2021 period, but here on the channel, we often suspected it would be the best trade because it was coming off such a low base, and we saw a big demand coming back in. Plus, of course, we had the manipulation from OPEC. So XLE 5.17% for the week here with energy. Semiconductors having a nice movement as well, up 3.37. And a sector we haven't spoken about in a little while, but the agriculture MOO sector is improving. And this is why it pays to sometimes think about things outside of what you usually look at, which is no doubt usually the tech, the healthcare, and maybe the financial material sectors. MOO coming back, even XLC and JETS, which we have been discussing, these are seeing small rotations occurring into them and could be worthwhile putting on your charts if you're somebody that does follow the sector analysis. In terms of volatility for the upcoming weeks and upcoming months, do expect increased volatility, guys. This will most likely be a fairly good traders market, and the bears may actually take control if they get through key levels we'll be looking at later on today's video, because guess what? The bears can take control of this market. It just takes a few down days to do something that will be monumental in the shift of the markets. And if you're not sure what that is, make sure to keep watching because we do have some big levels that are coming up. So increased volatility, we do expect. We also expect the technology sector to potentially underperform over the next couple of months due to its seasonal relationship. Over the last 20 years, January and February have really been some of the worst months of the year. And then we tend to get that really big pickup in April and May. So tech has its time. Seasonality is something that we like to look at here on the channel. And if we see the right types of technical analysis occur with that, it can be big. Now, This is the elephant in the room. We talked about it all the way through 2021. That was inflation. Now 2022, it's all about interest rates. And if we look at the 2-year yield, it's creeping up every single day. We're now sitting at 0.969 expectation for the Fed's interest rate come the next 2 years. And this is pretty much pricing in now multiple rate hikes. Now, it's not affecting the market as much as you would think it is, but 0.969, if this suddenly explodes past, let's say, a 1 to 1.2%, if that did occur and we get another rate hike expectation in there, you would have to think this is going to be, at least for the short period, negative for things like growth stocks. Now, over the longer term, we don't tend to see it be really a heavy correlation with long-term negativity for the growth stocks, but it can create that shock and we might get through key support. So for the bears, they're going to be very intent on watching this 2-year yield and watching the 10-year as well, and trying to figure out whether these things are going to explode, because the 10-year was up on the Friday session as well, 1.788. And if we look at that as an expectation of what's occurred, it looks like it's going to try to move towards that 2%. So US 10-year is exploding out. This is really the full bear case scenario right now, or the biggest thing, along with the negative news. That yield is going to be the discussion point. So if it keeps rising and we see a weakness in the markets, which we'll look at soon, that's going to be the bear case. In general, though, the markets are bullish, and at this stage, it's hard to see coming into earnings a crash to occur. Usually, earnings doesn't cause a crash unless they're bad. So it's usually that kind of bullish action into the earnings until we see the big tech stocks and some of the larger companies come out. And we also don't tend to see crashes when the PCC is like this. This is what we call the put call ratio. And for anyone that's not aware, if we have a huge amount of puts being entered into the market, which we'll look at later, it becomes one of those less likely to occur crashes, because the market would be paying off all of those doomsday sayers. The people that have got huge amounts of negative correlation in the market tends to not get paid off when it's up high. You use this as a bit of a contradictory indicator. If the PCC is down in this 0.6 kind of area, it's more likely that actually the market will fall. Whereas if the PCC is above like a 1.2 number, it's less likely the market will fall. And of course, when the market is falling, will the PCC go up? Absolutely. But often you can find bases with your technical analysis by looking for extreme points. So looking for when these puts get out of control and go up to these really high put call ratios, that's often getting close to the base formation, and it can show technical analysts the lows are in. So definitely have PCC on and understand it, but use it as just an indicator to go along with your analysis. Let's move over to the broader markets right now. We'll start with commodities markets. We'll start with gold. Nothing changes here for gold, silver traders. We're looking for that 1830 breach. Look at it, it keeps struggling around that zone. We talked about this particular wick being the biggest area. If the bulls are going to win, they'll smash it through this zone. And once it gets through here and it closes above, we get our participation phase. That'll be a big deal. Still worthwhile having an alert on there if you are liking these types of metals. And we're looking for it to go towards 1870 if that occurs. Silver's very, very similar. We have here a 23.40 price, and the same thing will be going for silver than gold. Oil, fantastic work, guys. You have been smashing it, and it has been very, very good trade. Probably the best trade so far of 2022. Oil smashed through. It went through the resistance over the break. It then got through the next resistance. We thought the 4-hour 20 would be too much for it. It was, and it's bounced all the way back up to this 84, 85 zone. Now, this becomes the key resistance and the big area for oil to try to break through, and it may be a little bit tough for it to go through it straight away. We would expect some profit taking to occur here, but once it gets through, and if it does, the next zone will be in the 90s. We're looking at it over here, somewhere around that 92, 93 zone, and there's still a lot of upside for oil in the trade this year should it get through the key zones. So great rebound, perfect technical analysis. It's acting so technically that when you're looking at Brent or you're looking at US oil, it's hard to go past them. They were one of the best 2021 trades, and it still looks like there's a bit left in it if you get the right prices and you know what you're doing. Remember, be careful with oil trades, especially on the rolls. but there's good opportunity there for the week ahead if we breach past that resistance. DXY, we know that this has been quite weak. It's kind of broken underneath the trend line, at least on the daily. The weekly has held above it. And we look here for a rally on the DXY. So hopefully there is a rally, it moves back up, and then around that 95.50 area will be where we expect some weakness to come back in. It looks like the dollar index is weakening, but with that yield going up, you would think that this will actually push the DXY up as well. So be careful around this zone. It's going to be a tough trade here. If it does come back up, you would expect weakness here because of the previous supports becoming resistance, and then the further sell-off. So DXY, something to watch, 95.55 for the week ahead. Let's move over to the stock market now, and we'll get started with some of our favorite stocks. You guys love Tesla, and rightfully so. It presents some of the best day trading opportunities with big moves upwards of 10% in one trading session. We saw it come back down in the Friday session. It sold off that 1110 area. That becomes a bona fide great resistance now that we'll be looking at. And we have that big buying pressure that comes in around 1,000. Now, there are some puts that are at 1,000 as well, which creates a bit of a put wall. It's not as big as usual, but as you guys know, if there's a huge amount of people betting against the stock, often it won't fall as much. It's not quite worthwhile really mentioning more than that, but certainly a little bit of a base around this $1,000 mark. And if we go down into the smaller time frames, such as the 2 hour, we'll notice that there is a little bit of a turnaround story here. So see how there's a bit of consolidation? That's good news. If we go into something like a 15-minute chart, you'll notice the close here on the Friday was pretty significant. Support being found, resistance being breached out. And on the smaller time frames, such as the 5-minute, 15-minute, we actually got the turnaround story. So will we be heading to 1110 this week? Let me know in the comments down below. What do you think about this on Tesla? It looks like the smaller time frames have changed the trend. The first kind of scaling in concepts might be there for some people that like this in their trading concepts. And then 1110 is the next resistance. And of course, if we break through that, 1200 becomes the next take profit target. For the bears, all you guys are trying to do is get it back underneath 1,000 with a daily close. If that occurs, you know what's going to be happening with the NASDAQ. We'll take a look at it later. And there's a lot at stake here for stocks like Tesla and indeed Apple. And if we have a look at Apple, it's really in the middle of nowhere land. We've got earnings coming up in 12 days. We know this stock tends to do a buy the rumor, sell the fact. If you haven't watched our videos before, you can go through, but just think about where earnings has been. Think about the ramp into some of these earnings here. Think about the ramp into those earnings. It can be a little bit lackluster in the earnings itself, but the buy the rumor can be quite strong. And I think there's going to be some triggers here. So not only are we in a trading range at this point, but we're in the middle of the range, which makes it difficult for larger time frame swing traders to get into it. 167 is our key support. We breach underneath that with a close below. It's on. It's going to be a double top or a channel break, and it's going to be a pretty significant sell-off, you would think. That's what the bears are hoping for. For the bulls, you're just hoping to get it back above 177, put in the lightning bolt. And I think if it gets above 177 in the next trading week, in a few days, really we're looking for that ramp into the earnings again, that buy the rumor, probably a new all-time peak. And then of course the earnings result to show us whether it can keep going. In general though, buy the rumor, sell the fact has been the thing with Apple. Not so much for the February one. Usually it's the other quarters that are better to play with this concept. The February one has been lackluster in the past. But remember, this is a thing. It's a phenomenon that occurs. And if you don't believe me, go back through history and have a look at how many times Apple buys the rumor and sells the fact, and you will be mind blown if you go check that out. Let's talk about ARK. Now, we've been on the record, I guess, this year as saying there could be a turnaround in hypergrowth stocks, and this might be one of the bigger percentage gains if you get it right. Now, if you get it right is the key point here. It doesn't just mean you go and buy any random level. You've got to wait for what we call accumulation bases. And right now we like this 89.69 level for it to break through as a resistance, because we have support, 20 moving average holding it down. And of course, at that point, we'd be putting in basically a max pain low if it was to bounce off here, big volume trading, and a change of trend. So something like this is what we're looking for, a nice change of trend on ARK, and in fact, the hypergrowth stocks. It hasn't occurred yet, but what we would be doing is going and having a look at these hypergrowths, looking for accumulation bases on some of the big ones, They haven't occurred, but you can see the trade volume is higher than it's been since a very, very long time. So a lot of funds going out of ARK, but at the same time being met by some demand, and the trade volume's up, which means that this is going to be one of those sectors that people are fighting it out for this year. And we'll be looking at ARK on our daily show to try to find that zone. Now, we always go through one sector in every video now, and gold is the pick, but MU would also be one of the ones that you might want to look at, the agriculture one. And if gold goes through that 1830, I think at the same time, we're going to see a big pickup here in gold stocks. And gold stocks have been really well beaten down for quite some time. And if you look at it on a bigger time frame, like a weekly, you'll notice it's been finding some form of support here. But this resistance breach would be a big deal. Not only would it be getting through the red line, the 20 exponential moving average, it'd be putting in a massive base at previous resistance, and the uptick in gold stocks could be quite fierce. In fact, this will be probably more than the commodity itself. If you think about how far down gold stocks are just from the previous peak, we're talking about 25% from the breakout. So there could be some good opportunity here in gold. A lot of people have been burnt on it a little bit. It's fair enough. There have been some false breaks on it, but at some point gold will break up. And when it does, it will most likely go on a rally. Remember, 1830 to 1870 and 1870 onwards could be quite strong. We'll watch this in the index itself if it breaches past that 32 bracket level. Let's move over to the indices now. IWM continues to hold the support. A lot of you guys are a bit scared of the Russell, fair enough, but it is holding that 210. The good news is we've got key levels. For people that are a little bit more conservative, you'd be looking for that 226 in the future. A breach past that should open up the 245 highs, a very nice proofed trade. But then on top of that, we've also now got a little bit of a potential double bottom. Buying wick, buying pressure. Should we get through 220, there becomes the opportunity. We basically create a double bottom on the smaller time frames, and we'll go into the 1 hour just to illustrate that. Here would be the low. We'll get the low again, the breach. If it goes through 220, movement to 226. And if you actually take this distance, once it breaches that 220, it would actually be predicting a breach of the 226 as well, which we know would be very significant. So it's now or never for IWM. It has to hold this level, because we know that when we look at something like a weekly, it's been very, very weak recently, and it has to hold through this 210. No weekly has closed below the 210 since 2021 and the breach up. And the small caps tend to lead into the market weakness. So that's something we'll be certainly watching. Long leg doji here on the weekly. You'll find that's very common through a lot of the indices, showing indecision here. A high, a low, an open, and a close right next to each other. It shows that the market has no clear direction just yet, but we will most likely get a breach to the upside or the downside over the next week. That will give us clear direction, and it will be on for either the bulls or the bears. This week is a fight. Mark my words, into earnings, that's a thing. It's going to be a fight between the bulls and the bears, and we see that again occurring in something like the NASDAQ. The community channel here, almost we call it now the community ascending channel. It's been fantastic for predicting resistance levels, fantastic for predicting buy zones, and at this stage, it's still on the buy zone. Should you be bearish this week? The answer is currently, from a technical level, you shouldn't be. It's still holding above. And as long as it's holding above, you shouldn't be feeling bearish. The good thing is we now have some key zones to be watching. 16,000 from the top side here for the NASDAQ will be the resistance. If it breaches this resistance, guess where it goes? All the way back to the peak, you would think, and that would be very, very strong. If it doesn't hold this zone though, this 15.4 into 15.2 level, so if it gets underneath 15.2 this week, what happens then? Well, we're talking about a pretty big sell-off, and that's most likely going to lead into at least the 50 exponential moving average on the NASDAQ, and around a 14,600 level. Previous supports become support again. Monthly S3 as well, pivot. So that's where the monthly S3 pivot would be sitting. It's a lot at stake here for NASDAQ, and as we know, this is going to be the volatile sector. This is going to be the one that moves up and down the most. Conversely, the S&P 500 printed a weekly long leg doji. We've got the high, we've got the low, we've got the open, we've got the close. What does that mean? Indecision. The market basically has no idea where it wants to go next coming into earnings, but it's going to remain positive until told otherwise. And we have a very easy zone for us to figure out whether the bulls or bears are in control. Break underneath 456, that will be break and close, will be underneath the weekly 20, underneath the S1 pivot for the month, and underneath the long leg doji, which will show us that the decision has been made. For the bull side, it's still looking good at this stage. Should we breach through that 471 kind of 30 area, it's going to be a strong move, and we'd be looking for it to go to the top of our ascending channel here. Again, the two trend lines that have been holding up for quite a long time. So is the market still looking bullish at this stage? Yes, but the bears have a real case here. And if they get through, they'll be eating salmon and absolutely smashing this market down, because the next stop for something like the S&P 500, should it breach underneath, could be as low as down here, with that S&P 500 going down to the 432 and the 50 exponential weekly. That will probably actually also mean that the NASDAQ will go even further down. But just remember, this is how key this S&P 500 chart is. The weekly 20 has not been broken and closed below since the pandemic start. It's always holding above that zone. It's such a big deal, and a lot of people will be watching it. So for the SPY, is there anything going on in the options world? Well, there's actually an outlier amount of calls expiring around that 500 price zone here for the week ahead. We do expect it not to be able to get through 500, but many of you would be like, well, that's an amazing result anyway. The call wall is sitting at 500. Is there any noticeable put walls or other call walls? I guess we would say we'd be watching this one, and we'd be watching the open interest coming off these prices as well for the week ahead. Check the Monday close, check the Tuesday close, see whether there's any extra interest that's been opening up in any of these options. We'll be doing it here on the channel, so don't worry, you can subscribe and get that information. But yes, the big thing is it's very unlikely 500 will be breached based on this call wall, and we will watch these other 2 points very closely. Let's move over to the crypto market before getting into the news to watch for the week ahead. Crypto market stabilizing, but actually a lot of the growth here is occurring in the side coins or the altcoins. The altcoins are doing a little bit better than Ethereum and Bitcoin right now, with some strong pickups there, a bit oversold maybe in those markets. And as Ethereum and Bitcoin stabilize, people are feeling more confident to get into those other coins. Still holding above 3250, which is a big deal here for Ethereum, and we're still hoping towards that 36. Almost a little bit of a high, low, open, close, long leg doji here on Ethereum. So a breach close above this price, which will be just underneath 3400, around 3380, will be a big deal here. And if we get that, we should be moving towards the 3600 on Ethereum. Bitcoin's the same thing, long leg doji, you guys can see it, high, low, open, close, 44k plus closure, big deal. On to 46k we go. That'll be an amazing trade should it occur, and we do feel that 46,000 is going to be a strong technical resistance. So the market will probably go up. It'll go like this, boom, boom, and then hopefully continue on. The base still seems to be forming here. The weekly, the daily, there isn't really a sign of incredible weakness occurring on Bitcoin just yet. It just looks like it's trying to find that base. And each time frame you go down to, whether it be a 2 hour, a 4 hour, or anything like that, it is holding up. We would like to see a breach of 44 over the next 24 hours. If that occurs, that will be good. And we don't want it too much further down, because then we start putting pressure back on the 40k downside and back on the bears getting control. And you do not want this thing under 40k if you're a bull here in crypto market. It changes the game, and the bears getting underneath that, we could be seeing a really big sell-off occurring. So be careful in the crypto world. For now, it's holding, but it's teetering on the accumulation base as much as it can. For the week ahead news, there's actually not too much US news coming out. The main thing is really earnings week. And of course, you should always have an economic calendar available. Do remember that Monday will technically be closed. We've got a bank holiday here in the US. So it's going to be the Tuesday, Wednesday, and Thursday markets that you'll be wanting to look at heavily. Remember, Friday is the third week of the month in terms of options expiration. That means there's a little bit more volatility. It's the biggest options expiration for the month, and it should be paid attention to. If you enjoyed today's video, guys, please remember to smash that subscribe button, and of course, click the like button. It does help us out. And put in the comments down below, which is your favorite sector for the year ahead? Which one are you investing in? Not trading in. I want to hear investment in. Speak to you soon. Bye for now.